You open the chart, not the daily, not the hourly, the 1 minute, the 5 minute, fast, alive, constant movement. It feels like control. It feels like opportunity. But what most traders don't realize is that these time frames are not just technical tools. They are psychological traps. Because the lower the time frame, the faster your emotions get pulled in. On the 1 minute chart, everything feels urgent. Every candle looks like a signal. Every move feels like the move. You don't wait, you react. And that's where the dark psychology begins. Because the 1 minute chart doesn't reward patience. It feeds impulsiveness. You start clicking more, entering faster, closing quicker. Not because your strategy says so, but because your mind can't handle stillness. Silence becomes uncomfortable. You feel like if you're not in a trade, you're missing something. That's not strategy. That's addiction. The market hasn't changed, but your behavior has. Now move to the 5 minute. It feels a little calmer, a little more professional. You tell yourself this is where real traders operate. But the truth, it's just a slightly slower version of the same trap. Because on the 5 minute, you still feel the need to act. You still see setups that aren't really there. You still rush entries because this one looks clean. But deep down, it's not about the setup. It's about needing something to happen. And that's the dangerous part. Because both the 1 minute and 5 minute charts create an illusion. The illusion that more activity equals more opportunity. But in reality, more activity often leads to more mistakes. You overtrade, you force trades, you revenge trade faster, losses hit quicker, and so does frustration. And here's where it gets darker. These time frames start shaping your identity as a trader. You begin to believe you're a scalper, a fast trader, someone who thrives in chaos. But if you're honest, it's not skill, it's discomfort with waiting. Because higher time frames require something most traders avoid: patience, discipline, stillness. And the lower time frames protect you from that discomfort. They keep you busy, distracted, entertained, even when you're losing, especially when you're losing. Because as long as you're in the game, you don't have to face the truth that maybe you're not trading the market. You're reacting to your own mind. So the question isn't, which time frame is better? The real question is, why are you choosing this one? Is it because it fits your strategy or because it feeds your impulses? Because the 1 minute and 5 minute charts, they don't just show price, they expose you. And if you don't recognize that, you'll keep trading fast, but going nowhere. You move away from the noise, from the 1 minute, the 5 minute, and now you're here, the 15 minute, the 30 minute. It feels different, cleaner, slower, more controlled. You tell yourself, this is where smart trading begins. And you're not completely wrong. But there's still something hiding here. Something most traders don't notice. Because the psychology doesn't disappear. It just becomes more subtle. On the 15-minute chart, you start to feel patient. You wait longer for setups. You analyze more. You hesitate before entering. And that hesitation feels like discipline. But sometimes it's not. Sometimes it's fear. Fear of being wrong. Fear of losing again. Fear built from your past mistakes on lower time frames. So instead of impulsive entries, you start missing opportunities. Clean setups pass right in front of you, and you do nothing. Not because there was no trade, but because your confidence is damaged. That's the first trap of the 15-minute time frame. Overthinking disguised as discipline. You zoom in, you zoom out, you add confirmations. You keep telling yourself, let me just be sure. But the truth is, you're trying to eliminate uncertainty. And in trading, that never works. Now step into the 30-minute. This is where things feel even more professional. Fewer candles, more structure, clearer trends. You feel like you finally understand the market. But here's the hidden danger. The illusion of control. Because on the 30-minute chart, everything looks clearer. After it has already happened. You see clean trends, perfect entries, obvious breakouts, and your mind starts playing tricks on you. This is easy. I should have caught that. I won't miss the next one. So what do? You start predicting. You enter earlier than you should, trying to catch the perfect move. And when the market doesn't move the way you imagined, frustration builds again, because now it's not just about losing, it's about your ego. You thought you understood it. You thought you had control, and that's the second trap. Confidence without consistency. The 30-minute chart makes you feel smarter than you are. And that feeling is dangerous because it pushes you to take trades you haven't truly earned. So between the 15-minute and the 30-minute, you're stuck in a different kind of battle. Not impulsiveness anymore, but internal conflict. Should I take it or wait? Is this clean or am I forcing it? Am I disciplined or just scared? And that's the truth most traders avoid. As you move to higher time frames, the market becomes clearer, but your mind becomes louder. Because now, it's not about reacting fast. It's about trusting yourself. And if that trust isn't built, no time frame will save you. So again, the question isn't, is 15 or 30 minutes better? The real question is, are you thinking clearly or just differently confused? Because these time frames don't remove psychological pressure, they expose a deeper level of it. And if you don't face it, you'll keep switching time frames, looking for clarity, while the real confusion is still inside you. Now you've slowed down even more. You've stepped away from the noise, the rush, the constant need to act. You're now on the 1 hour and the 4 hour charts. This is where things start to feel serious, more calm, more structured, more professional. You look at your chart and think, this is how trading is supposed to be. And again, you're not wrong. But the psychology, it doesn't disappear here either. It just gets quieter and deeper. On the 1 hour time frame, you begin to feel in control. You wait longer. You analyze better. You don't jump into every move. And for the first time, you feel like a real trader. But here's the hidden trap: attachment. Because now, you don't take many trades. So when you finally enter one, it starts to matter more. Too much. You watch it closely. Every candle, every small move against you feels bigger than it actually is. Even though it's a higher time frame, you're still reacting internally. You just hide it better. You don't close the trade quickly, but mentally, you're already panicking. That's the first danger of the 1 hour chart: emotional attachment disguised as patience. You tell yourself you're holding, but in reality, you're hoping it goes your way, hoping you didn't make a mistake. Now step into the 4 hour. This is where traders feel powerful. Fewer trades, cleaner trends, bigger moves. You feel like you've finally escaped the chaos. But here comes a different kind of darkness: ego. Because on the 4 hour chart, you start to believe you understand the market on a deeper level. You see structure clearly. You predict moves with confidence. And slowly, you stop questioning yourself. This is a perfect setup. This has to work. This is my trade. And that's where the danger begins. Because the more time you spend waiting for a trade, the more convinced you become that it must be right. You've invested time, energy, attention. So when the market goes against you, you don't exit. You hold. You justify. You ignore signs. Because accepting the loss feels like admitting you were wrong after all that waiting. That's the second trap: conviction without flexibility. The 4 hour chart builds stronger beliefs, but it also makes those beliefs harder to break. And that's how small losses turn into big ones. So now, between the 1 hour and the 4 hour, you're no longer fighting impulsiveness or overthinking. You're fighting something deeper: attachment, ego, identity. Because now, trading isn't just something you do. It's something you believe you understand. And that belief can blind you. So again, the question isn't, is 1 hour or 4 hour better? The real question is, can you stay neutral even when you feel certain? Because the higher you go in time frames, the less noise there is in the market, but the more dangerous your confidence becomes. And if you don't control that, you won't lose because you were too fast. You'll lose because you were too sure.